Welcome back to the Ascent Trading YouTube channel, and today we're going to be talking about our core list of companies. Now, if you're familiar here and you follow us on all of our social platforms, you'll know that we did a small series of this on TikTok. If you guys aren't into the long form content that I do over here on YouTube, go take a look at our TikTok. I'll link it down in the description below. It just has all of these companies basically just shortened, and it tells you what they are, why we're invested into them, and why we like them on our core list. So it's just basically a shortened series of this video. But to get right into it, what is our core list? Our core list is our main equities that we trade besides our indexes. So when we talk about a core list, you don't exactly have to follow my core list, but relatively everyone has the same sort of stocks, right? You want high volume, high moving, mostly relevant, and strength, right? Those are the four things you want in a good core list equity. So when we talk about core list equities, we talk about NVIDIA, we talk about Microsoft, Apple, the Mag 7 names, some of the relevant names. I know over the weekend with the Iran tensions, oil would be a core list technically. Not all the time though. What we want to do when we enter the trading day pre-market is we want to take one move into our index, right? One trade idea, one trade thesis. If we can get one trade thesis for an index and two trade theses for two individual equities, well, now we have three options that we can trade that morning. Chances are one of those options would present itself. Where that gets complicated is you have to manage your equities, right? There are millions of stocks out there to invest in, and not all have the same relevance or volume. So, again, talking about core list names, you want relevance, you want strength, you want volume, right? Mag 7 names, to point out some strength names, right? I know silver had some relatively good strength in the beginning of 2026, and so did gold. MU has had some great strength. SanDisk, TSM, basically semiconductors, AIs, and data center names. So I've moved myself over here now, and what we're going to go over is just what names are in my specific core list. And I've got the heat map up on my screen to show you guys what my core list consists of. So first off, starting off with the big Mag 7 names, right? NVIDIA, Apple, Google. I have both Googles in here. If I were trading one, however, I would trade Google with an L, simply because it has a little bit difference and a little bit more volume. Microsoft, Amazon, Tesla, Meta, Broadcom, JP Morgan, Costco, AMD, Intel, CoreWeave. SoFi is on there, but I didn't really specify that one. It's on the core list, but it's not a main core list candidate. Robinhood's on there. UNH is on there. That's also not a main candidate, and also LLY is on there. I don't know why it's not on my heat map, though. Maybe if I refresh it. Nope, still not there. Okay, well, and Palantir. Palantir's on there as well. So these are main stocks that we look at, honestly, every pre-market. Every morning I look at all of these stocks, and I see what's setting up, where are my key levels sitting, what's relevant news, just basically so I can find a move that might play out, so that way I have an option to take a trade. It is now the next day, so we're going to get right into our core list, starting with Apple. Now, Apple's on our core list for a main reason of being a Mag 7 name. It is the second biggest company in the market by market cap, and it has great relevant strength. I know that some of the tactics for figuring out if Apple will have a good quarter or not involve, looking at Black Friday sales. It involves looking at how busy the stores are throughout the quarter. It involves how much they're releasing this year with technology and stuff like that. I know Apple just released the Apple Box. I don't know exactly what it's called, but it has integration with Claude AI, and I know a bunch of, rich gurus bought a bunch of them to try and make bots off of and all this. And I'm pretty sure it was just a scam. Not really a scam, but it was just more of a, hey, this can help build AI models, so buy it from us. So what I would say is that Apple's probably has a great revenue beat this next quarter, this next earnings report, simply because of the new technology that was given to the public and how many people bought it up. But Realistically, we watch Apple on a daily basis with our core list because it's just that good of a name. It has the high volume, it has the relevance, and it has the strength that we want in a Mag 7 name. So the reason for looking at Apple constantly is it is a great consumer product. I don't know exactly if Apple has adjusted itself in the stock market to be on the more semiconductor side compared to the consumer side, but Apple's a great company overall simply because it is a Mag 7 name, it has the high volume, and it's relevant. If we look around society, we know that everyone and their mothers owns an iPhone, or everyone and their mother owns a MacBook or an iPad or something like that. Point is that Apple is a relevant product. Apple constantly makes innovations and it makes you buy a new phone. All right, how many of us have Apple phones that constantly update them and now they don't work properly or they don't work as well as they did, or heaven forbid you got to go get a battery replaced, or you have to go get an AirPod replaced. Point is, there's constant maintenance and constant innovation within these products that they're constantly making money. So when we're talking about core list stocks to invest in long term, this is one of them. Our Mag 7 names are pretty much all long-term investments, as those have exponential growth ahead, especially with the AI on the rise. But Apple's one of those stocks where you really don't know until it happens, right? We know that Apple usually gets a huge rally around Christmas time because everyone's buying their kids iPhones and technology for Christmas. Black Friday's around Christmas and all that. So, oh my God, I am having such bad heartburn today. I am so sorry. Let's take a sip of water. There's hair on the bottle. I also have a Xinin, which doesn't help my stomach. And I had soup, so I'm burping that up, which is not yummy at all. But back to Apple. Tim Cook is the CEO, which, as I get a text message, Tim Cook is the CEO, which has relevance because Tim Cook's name is in the market news a lot. He's constantly making comments about the company. He's constantly making innovations. And overall, Apple has enough relevant news and enough relevant events throughout the year where we can kind of calculate how this stock will move on a daily basis. And the reason we watch this on a daily basis is because usually it has great moves that set up. I know that on this day right here, we had a break above within the gap, and then it retested 259, and it was up and away through the rest of the day. So realistically, Apple's a great trader. I like trading Apple every now and then again. I hold shares in Apple, and I've been leveraging into back here, I believe I averaged more into, and I've just been buying dips on this just for long-term gains. The next stock on our core list is AMD. Now, we have AMD on the list simply because it is a very strong candidate for the AI and semiconductor trade. AMD makes all computing parts for PCs, data centers. It makes RAM, CPUs, GPUs. AMD is kind of a jack of all trades. And most recently, earlier, I believe it was early 25. Sorry, not early 25. It was in November of 20 or October of 25. They had an OpenAI investment. Now, this caused the stock to jump exponentially overnight, and I remember cashing in some shares on AMD the morning after. Now, what's great about AMD is that this is a really strong AI name, and it's very relevant because it has OpenAI infrastructure invested. It has, deals with NVIDIA and CoreWeave. AMD is a great stock overall because it is the manufacturer of all the CPUs and, RAM that's going into these huge data centers. And recently with data centers, we've seen a huge influx of money into them. There's a lot of money flying into data centers for the use of AI. AI needs energy, and the worst part about it is that they need to use up so much computing power and components. There's a lot of C's that I'm talking, and it's jumbling my words a little bit. There's a lot of computing, processing, and energy requirements for data centers and AI, and the best part about AMD is they kind of help with all of that. They make the RAM, they make the CPUs, they make all the AI integration software. AMD is just a great stock to go up exponentially because it has such great relevance and volume. The reason that we look at AMD on a day-to-day basis is because sometimes it has great intraday moves. Obviously, looking at the chart in front of us, not that clean, not that tradable or actionable. But what's nice is that AMD is not the cleanest trader with options, but it is nice to hold shares in. I do hold shares off this long consolidation at the all-time high previous to the OpenAI investment, and I still hold shares all through this. AMD is a great company to invest in long term, and I cannot wait to see where this goes within the next 10, 15, 20 years. Stock number 3 on our core list is Amazon. Now, if you've been living under a rock since 2020, you would know that Amazon is the greatest consumer online retailer in the world. This is one of the biggest online retailers ever, and behind the wheel is Jeff Bezos. Now, everybody knows who Jeff Bezos is. He got screwed on his divorce. I'm going to try not to swear. But what's really enticing about Amazon is that, as I've said, it is one of the biggest online retailers internationally. So we have all sorts of money coming into this. Foreign, domestic. God, I'm still burping. I'm so sorry. I gotta take another sip of water. I seem to be out of water. Anyways, what's great about Amazon is that now, when they're such a strong online consumer, now they're shifting their focus into their systems, their AI, their autonomous vehicles and delivery services, their warehouse management with autonomous vehicles and stuff. So what we're seeing is a huge shift from, okay, we've mastered the online consumer, now let's switch over to the integration part where we can make our business more efficient, right? And I remember a while ago, I don't remember if it was COVID or it was even before COVID, we talked about Amazon having drones, right? You know, they would fly the drone right up to your house, drop the package right on your front door, and right away, you know? Now, that's great and all, but what does that do? It eliminates revenue going into payroll. It eliminates, you know, the fact that you cannot get your package because the guy doesn't know where your house is. So that's an integral part of what we're talking about here on just how they have so many ideas to take that online consumer so much further. This company is already massive, and it can get way bigger. As well as mastering the online e-commerce platform, they are moving into technological advancements. Now, we saw this way back in the day when Amazon released the Echo or the Alexa. Now, these were top-of-the-line instruments that no one has seen before, you know, an at-home AI assistant, and that was great. That was the start of all of this. Then we saw the Google Home. Then we saw, you know, Siri get updates. And then we have Gemini and all this other BS. What the point I'm trying to make here is that these guys are great at innovating with online, with how much revenue they make, right? Now they're just, basically, they're making so much money, they're just going for the most efficient process where they can make the most, right? And when we hear that and we think about that in the market, those are the companies that we want to invest in. Those are the companies that are going to go that much further over the next few decades. The only way that Amazon goes to zero is if e-commerce goes away forever. You will always have people spending money online, and that's just a fact of life now. People got too comfortable during the pandemic, and now they don't want to go outside. They'd rather just have it delivered to their doorstep. That's why DoorDash exists. That's why Uber Eats exists. That's why Amazon is so profitable. So this company, overall, in the next few decades, will be a heck of a lot higher than it is now. The fourth stock on our list, and this one's a little brief, it's Broadcom. This stock is known as one of the AI superpowers. It's been around for a long time. This was Nancy Pelosi's favorite insider stock to trade, so it definitely does have relevance. And what you can see on my chart here, and this is the daily chart, we've been stuck in a balance range forever. Dude, I want to trade Broadcom. I really do. It does get good volume. It is relevant. But God, is it hard, dude. I don't know how Nancy Pelosi made so much money trading this. I really don't. Broadcom's up there simply because it's relevant and we need to keep watching it because it's a name within the index. I believe it's weighted, I want to say like 7th in the S&P. So it definitely has relevance in the way that it moves compared to the indexes. But this is just one that we want to keep an eye on, right? I don't usually trade this unless it's a stupid A+ setup, no-brainer that I can take and I know I'm going to make money. But we want to make sure that we're taking really big precaution if we're trading this with options, right? I hold shares in Broadcom. They've gone nowhere, obviously. I invested, 2 months ago, which somewhere is in this balance range. So this is great for shares because it's up so much, and obviously it's been around for a while. I mean, look at this monthly chart. When did it IPO? Yeah, it's been around since 2009. Broadcom has been around for at least 2 decades almost, and it has had some great relative strength. As we said already, Nancy Pelosi's favorite insider stock. It's an AI superpower. It has the relevance. It's an oldie but a goodie. It's a great trader for long-term gains. The next stock on our core list is Costco. Now, Costco is going to be another brief one. It's not really one that we trade on a daily basis. It's not one that we watch pre-market, but it's a great stock to invest in for the long term. The reason that we're invested in this to the long term is because it is an international consumer grocery store. There's a Costco in every city. It's a wholesale store, so people spend more money buying more, thinking it's less. But realistically, why we buy this stock and why we consider it to be a great wealth grower over time is the dividend payout. Now, if you ask any real Wall Street financial investor, you will know that Costco is a great stock to hold long term based off of dividend payments. Basically, in any dividend strategy that you see long term in the market, Costco is in there. Costco's one of the greatest long-term gainers with dividends and compounding interest. Compound interest is what really makes us money in the market, as it doesn't have to involve any of us putting actual money in. It's just taking the dividend payout from our shareholdings and compounding back into the stock. Basically, it's a dividend reinvestment program. The seventh stock on our list is CoreWeave. Now, this stock IPO'd back in March of 2025, and it has had some great relevant strength. We've seen them partner with AI for AI computing. We've seen massive amounts of investments go into this company with OpenAI. And realistically, the only reason we watch this company is because it is a huge data center name paired with NVIDIA. These companies go hand in hand as they constantly invest into each other. And realistically, what we're really looking for with CoreWeave is an early data center entry. We know that data centers are going to be profitable at some point because of how much money is getting dumped into them, so why not get in early? CoreWeave has some great volume and some intense relevance within the market based on the IPO, and realistically, what we're looking at right now is the IPO high getting retested at $65 a share, and I keep picking up this stock. I keep buying more and more and more, and realistically, this is one of the biggest positions in my portfolio, so I'm betting a lot that CoreWeave will definitely be profitable and be upwards of $200 a share at some point in the near decade future. With this pick on our core list, we are basically kind of just enforcing the point that the AI trade is the one that we're going with for the future, right? We talk about big Mag 7 names which are having AI integration and who are making the components that go into AI. Basically, it's the same thing we're doing here. Data centers are a component of AI. Data centers are the energy source of all the AI infrastructure. Now, we're just getting in early before they actually turn on the power switch. The seventh stock we're going to talk about on our core list of companies is Google. Now, there's two equity tickers for Google. There's GOOG and GOOL. Sorry, GOOGL. Now, we're going to talk about the GOOGL, the one with 5 letters instead of 4, simply because it has a little more volume, it moves a little bit more cleaner, and it's just what I have my levels marked out on, so I'm not moving them anytime soon. However, we're talking about Google in our core list because, yes, it's a Mag 7 name, and it is the top 3rd rated company in the market by market cap. Now, what does this mean to investors? Well, Google's a great search engine. We all know that. We use Google on a daily basis. Google runs YouTube ads, which is also a great revenue stream, and most recently have introduced the AI companion Gemini. Now, Gemini has produced great revenue for Google lately simply because it's helping with their search engine. Now, what Google's looking to do is kind of have that application in a bigger way besides being on your browser. It gets a little finicky when we're talking about the real details, but realistically, Google's a great company to invest in. It's a Mag 7 name. It has a heck of a lot higher to go in the next few years. And we saw relative strength out of Google while the market was tanking back during the Chinese tariff situation. So, excuse me, definitely good relative strength throughout Google throughout the year so far. The eighth stock on our list that we're going to talk about is Robinhood Markets. Now, when we talk about Robinhood, it's a great new stock to the market. It IPO'd recently, I believe 2, 3, maybe even 4 years ago. But what we really look for in Robinhood, it's a great financial market indicator, right? If people are buying, if people are selling, if the market makers on Robinhood are making good features, if the company is good, and all of that. But the reason that we look at Robinhood is because it has immense volume, immense strength, and immense relevance, even though it just IPO'd, which is fantastic for us investors because this is something that we can grab nice and easy. Now, I was never invested into Hood with shares ever. Recently, I've been picking up a lot of shares down here. I've been buying this pretty aggressively, and I'm going to be honest with you, it'll probably pay out simply because of the sheer amount of consolidation down here. What I'm really looking for is kind of a retracement up to maybe $100 a share, and I'll sell some of my shares for profit. But realistically, Robinhood is a great trader. It's decently volume. It has decent volume. It has decent relevance, and we look to it for a great broad market indicator. It was recently added to the S&P at the end of 2025, which is a great news catalyst for this stock, saying that it's, again, so recently IPO. Well, maybe not recently. It IPO'd back in 2021, so that's 5 years ago. Wow. Wow. 5 years ago. Crazy stuff. Crazy stuff. But realistically, Robinhood, it's a great long-term investment. Definitely one of the stronger commercial brokerages out there. And realistically, it's just a great buy for long term because I guarantee you, with more assets that come out and with more volatility and everything, they're going to come out with better features. It's going to be one of the best brokerages ever. And again, it's a US based company. We talked about this in our Webull tutorial. Robinhood is probably one of the stronger retail brokers out there, and a lot of people have it. So this stock has great relevance. It's a great long-term hold, and I'm going to keep aggressively buying this. The next stock we're looking at, and this will be a brief one as well, Intel. Now, Intel's had some great strength this year, especially with the government stake being put into it. And I remember buying this with shares back at $25, and then it basically jumped overnight, which was crazy. And now we're sitting at $45 a share, and I'm still holding half my position from the original buy-in. Intel's a great stock. It's another AI semiconductor name. It has a government stake in it, so it's definitely going to go higher at some point. Obviously, we've been seeing some massive consolidation and equilibrium in the market lately, so nothing really relevant to say on this just yet. But Intel's one of those slow movers that took a while to get up and going, but once we saw that government stake, it's definitely been having some better volume, some better trades, and definitely some more strength. So for long-term gains, this is definitely a good one. For short-term day-to-day trades, this has decent setups. I've taken a lot of Intel trades over the past 2 years, and I think all-time I'm spitballing, but I want to say a little south of 10K on Intel in total. And I don't trade Intel often, but crazy stock. I do remember the day where the government did put a stake in it and the stock jumped overnight. I woke up to, I think, a 3,000% on my Intel contracts. That's iffy. I really don't know. It was a long time ago. Actually, it was back in September. Back in September. That's great. Focus. Crazy to think about. But Intel's a very reliable stock. It's relatively cheap as well if you're buying it for long term. And I haven't bought any new shares just yet. I'm waiting for kind of a bigger pullback maybe, or to be able to sell my full position or the rest of my position at the all-time high. But Intel's a good watch. It's definitely got some relative strength, and the government has a stake in it, so it has to go up, right? The next stock we're talking about, and this has direct correlation with the XLK financial sector, it's JP Morgan and Chase. Now, this one is on our core list simply because it is a great financial name to track, and it is a great high volume, high relevant, high strength stock that has a great move. What we're realizing with JP Morgan is that, yes, they're a little on the immoral side in the market. Yes, they manipulate the shit out of stocks, and we've seen this most recently with the silver short that fucked over Chinese investors through the night. Regardless, I'm not going to bitch about that. I made money on those shorts. Fine by me. It happens. Whatever. What's really enticing, though, with JP Morgan is that this is the strongest financial banking apparatus in the US. I know a lot of people who use JP Morgan and Chase. I personally use a JP Morgan and Chase investment account that they run for me. I just put money into it. And what's really great about this is that it's the financial side, so it has to be on our core list because we need a financial indicator, basically. And JP Morgan pretty much moves hand in hand with the XLK, from what I've seen when I'm trading it. And we really look for kind of intraday moves with JPM. I have been recently buying shares, nothing too serious, $50 on this day, $100 maybe the next day, incremental, just kind of hoping to get some bounce off these lower levels down here, because this is a huge breakdown up here off the top. It's a head and shoulders neckline break pretty much around 302, and now it's been kind of capitulating downwards, and I keep buying because, why not? But realistically, JP Morgan is a great long-term investment. It's a great financial strength indicator. And as long as you're looking at the XLK, if you're trading this with options or even futures, I think you'll be fine. The next stock we're going to talk about is in our healthcare section, and we didn't talk about this over on the TikTok series. It's Eli Lilly & Co. Now, I don't trade this stock. I don't own shares in this stock. I don't trade options on this stock. All I know is that it has had some insane strength and relevance ever since what's the eighth month of the year? August, right? August, it's basically been up and away, and recently now we're just getting some high and tight consolidation, basically near the all-time high. I'll make a level on this real quick because maybe I do want to start trading this. We'll go right there. Look at that. All right. So, Eli Lilly is one of the biggest healthcare sector stocks. It's up there with United Healthcare, which we'll talk about in a little bit. But Eli Lilly is a great trader. It's had some insane strength. It's a good healthcare sector indicator. And realistically, if you're picking this up with shares, you're probably going to get a split pretty soon, saying that it is $1,000 a share or $977 right now. But does that really stop us from investing? No. So, if I were you and I was going to invest in this with shares long term, I would definitely wait till the split happens, because you'll definitely see a downtrend during the split, and that's usually a good time to pick up shares. Actually, if we run over to Netflix real quick, and we'll just talk about splits real quick, and let's turn on corporate actions. Okay. We can see that they split their stock 10-1 on November 17th. Jesus, I can't read dates. And it was a pretty heavy downtrend from there. Recently, it's kind of been getting some uplift, which is great. Netflix, I do own shares, I believe somewhere around $80 a share, if I'm correct. Yeah, because I tried buying it off this little consolidation right here. But we're not talking about Netflix, so just relevance when we're talking about splits. Obviously, it matters because this is looking at a split at some point. Usually, stocks valued over $1,000 do get a split at some point, and when that happens, there's usually a downtrend that precedes and follows the split. Next stock on our core list we're going to talk about is Meta. Now, Meta is another great AI semiconductor name on our Mag 7 list. When we talk about Meta, we're talking about Mark Zuckerberg, and we all know who Mark Zuckerberg is. He is the CEO of the greatest entertainment consumer company in the world. Meta not only owns Facebook, but owns Instagram as well, and on top of it owns a many and multitude of AI ad integration software. Excuse me. What we saw recently is that Facebook ads have been generating an extremely crazy amount of revenue for Meta. What's great about this is that Meta is a great long-term stock to invest into. We know that, you know, everybody is constantly on their phones now. Rather, it's the older generation on Facebook looking through old photos, or it's the newer generation scrolling on Instagram Reels. We have seen a massive amount of money outflow through Meta with Meta ads and AI integration with Reels and stuff like that. But this company is making hand over fist cash on just people scrolling on their phones, and that's what the best part about it is. That's the future. People aren't going to stop scrolling. People are just going to get more bored and more complacent with life. So this is a great long-term buy. You can see here on my chart, I recently took a trade on this back in January, and I believe we made 3,000% on it, if or 1,000%. I really don't know, but great company to invest in long term. I hold shares in this. I trade this every now and then, and again, recently we've seen sort of some sporadic price action. Definitely a little crazier than usual, but Meta's a crazy stock, I guess. If you hold it with shares, you're a little bit safer than the rest, but if you're swinging options on this on the daily, probably not doing too well. Anyways, Meta, great long-term investment. Just think about people scrolling on Instagram. That's all you have to do. The next stock on our core list we're going to talk about is Microsoft. Now, Microsoft is the fourth biggest company in the market. Recently, it's been in a huge downtrend with some AI breaching and some foreign hackers, but Microsoft is a OG. It is one of the best stocks in the market. It's another one of the Mag 7 names, and it's at a relatively cheap price right now. When we talk about Microsoft, and I grew up playing Xbox, I think Microsoft Store instantaneously. I have so many old Xbox gift cards that I blew on the Microsoft Store. Rather it was buying, shark cards on GTA or buying games. I gave so much money to these people. They need to pay me back. It's time to start paying me back. So I don't trade Microsoft with options. I don't think I ever have. Realistically, I own a lot of Microsoft in shares, and I just keep buying dips realistically because in the long term, and I'm talking 10, 20 years ahead, Microsoft up and away. It'll be a crazy stock to own. Right now, it's simply at a discount. So buy while you can, and obviously proceed with caution because this could go lower technically with based on the rejections we're getting currently. The 13th stock on our list we're going to talk about, and everybody's favorite, the biggest company in the market rated by market cap, NVIDIA. Now, when we talk about NVIDIA, we are talking about the biggest AI name, semiconductor name out in the market. We have seen some crazy moves with NVIDIA. It is the biggest GPU, CPU maker. It's had some crazy AI integration. It runs some data centers, open AI investments. There is so much going on with this stock. It's honestly hard to keep up with sometimes. Insane strength, insane relevance. Definitely moves pretty good, but as we're looking at the daily time scale here, we can see that we are stuck in a very big equilibrium. And I generally thought that we were going to get out of this equilibrium with just kind of, what was I going to say? Damn it. It's late at night. I'm sorry. I have to go to work tomorrow too, which kind of blows. But I thought we were going to break the balance range with earnings, and it looks like we're starting to get somewhat that over here. But with all of this consolidation right here, it kind of invalidates this lower high, especially with this little wick bearish hammer on the daily chart from today. So NVIDIA, great long-term stock to buy. It's the biggest stock in the market. It will go back up to the all-time high at some point. I own a lot of NVIDIA. It's not the biggest position in my portfolio because I have been taking some profits recently. my trading strategy, and I've say I've been taking profits lately on most of these because my trading strategy dictates take profits at the beginning of the year because that's usually when the most pullback happens, and then kind of just buy the dips in a 3 month period as we get into spring. So, I've been selling this last 3 months, but usually around middle of April I start kind of buying back, and that doesn't stop me from buying stocks in general, but I definitely sell more from January to March than I do buy. So, Nvidia, right? Great stock, great relevance, super strong in the AI front, GPU maker, can't live without Nvidia. You got to invest in it. This is a need to hold stock in your portfolio. Buy the dip, buy the pullback. You will be rewarded at some point, whether it's today, tomorrow, next week, next month, next decade, whatever. The next stock on our core list that we're going to talk about is Palantir. Now, Palantir is one of the biggest AI defense sector companies out there. We have seen some immense, we have seen some immense strength come from it since its IPO back. Let's take a look. Back in 2020. I have something stuck in my throat. I'm sorry. And this company is great because we've seen the government pick up its applications. Obviously, Big Brother's always watching. Remember that. I'm looking into a camera right now as if they're not looking back at me. But Palantir is a great stock because it has insane relevance, it has insane strength, and it is relatively new to the market. It is not really. I remember actually in the early days of Palantir when it IPO'd, I don't think they were profitable for a while. Like, I believe their earnings reports were net negative, which is odd. But what we've recently seen is a lot of AI surveillance get picked up by the government to spy on its citizens. So this stock is definitely going to go higher and higher as the years progress. The next stock we're going to talk about on our core list that we didn't talk about in our TikTok series is SoFi. Now, SoFi is a great long-term buy because it's an AI name, it's a semiconductor name, and it's a financial name with SoftBank being introduced earlier in the year. What's great about SoFi is that it's relatively cheap, so you can pick this up with a lot of shares. I know people who swing a lot of options on SoFi, and they get paid pretty well. So what I will tell you about my personal strategy with SoFi is that I bought $5,000 worth of shares around the $18 price, and this was, I believe, a few days ago, a week ago maybe, but what's great about SoFi is that you can see on the weekly chart, we are coming back into this previous all-time high consolidation back in 2025. What's great is that this is a great spot to make a higher low in the trend count. So this could get going back up in the upwards direction. So I've been picking this up with shares recently, and that's pretty much it. It's not really relevant, and it's not really in the news that much, but it's relevant enough for us to take shares on and hold long term. The third to last stock on our list that we're going to talk about is Tesla. Now, we've seen immense strength from Tesla because the CEO is Elon Musk. It's constantly in the news, it's strongly relevant, and it's a great one of our semi-Mag 7 names, but not that big yet. Where this gets interesting is we talk about SpaceX IPOing and the XIPO, XAI IPO, and just how much money is going to be correlated with this stock just because it's Elon Musk. So what we see on Tesla is a huge consolidation range that really hasn't broken anything yet. Realistically, I haven't owned shares in this for a while now, but I wouldn't pick it up with shares. Options trading and futures tradings on this obviously is very good at some points. I know the IV is pretty high, so you're paying a lot of premium on options, but this is a fantastic stock. It's a lot of relevant. It's a good volume. And I wouldn't say it's a great long-term holder, but it definitely can pay you well if you buy at the right times. The second to last stock we're going to talk about briefly is United Health Group. Now, this is the same running with Eli Lilly & Co. Realistically, the only time that this was any sort of relevant was when the CEO got blicked down in the middle of New York City, and when, I believe, what's his name? Warren Buffett bought into it at the lows. So I will tell you this, I did make a good amount of money on UNH, not from the guy getting shot, but from Warren Buffett's buy-in, and I really just haven't done anything with it lately. Instead of just not buying shares, I don't trade this with options. It's really not a great trader. It's not a lot of good volume, but Definitely one to keep an eye on for the healthcare sector. The last stock on our list that we're going to talk about is VU. Now, VU is an exact tracker of the S&P 500. SPY, which is right here. We're watching SPY intraday because we are currently in a trade with it. We have shorts in this that look like we're going to get stopped out maybe for profits. I have no idea, but we'll see. And realistically, what we're talking about when we talk about VU is what we're compounding into with our profits. Long-term gains in this market require long-term, great year-over-year gains. And what VU offers is a 12.5% yearly payout average of VU. And I believe that's the number. Don't quote me on that. But VU is a great long-term hold that I average into personally with my options profits. All of my IRA accounts have a lot of VU in them. I own a lot of VU personally. It's a great long-term gainer, and it will pay you with wealth in the future at some point. This is a great way to create a nest egg, and realistically, I trade the SPY pretty much every day. So watching VU is pretty much pitch perfect of what I do on a daily basis, and I know where to buy and I know where to sell realistically. So always buying VU, always averaging up, down, left, right, center, whatever, and that's all we can do with this stock realistically. We don't want to take options on it. We don't want to take day-to-day trades on it. It's definitely not one of those stocks. It's one of those long-term hold with share stocks. And, if you want a little light on our trade right here, we took 5 contracts out of a 10-contract position down at 100%, and we're ballooning runners as we get a little pullback. I do think that we're going to break yesterday's low, which would be great, because then I'll probably be 125% up on my contracts, but we just don't know, so here's to hoping. So that was our entire core list of companies. Now, if you want a shorter, quicker explanation of all this, I don't know why you would. You watch the video all the way through. We do have it up on our TikTok if you want to go take a look over there at Ascent Trading on TikTok. Usually I would close this out with my face cam RC, but at the same time I'm in a trade right now and I'd rather watch it on my screen. That we're about to hit it. Come on. Just push down into yesterday's low. Come on, get there. It's just gotten. I'm not emotional trading, I swear. So realistically, the core list is something that we want to hold equities in. We want to hold shares in that because they're long-term gainers. They're great volume. They're great options. Realistically, if you want to add all of those to a pre-market prep scenario where you're looking at each of your levels and where price is sitting in the morning, that is a very valiant strategy. I do the same thing. It's simply, oh my God, wait, come on. Bang! So this has been our core list series. Thank you so much for watching the in-depth video. We have, again, the short form video over on TikTok. Go check us out over there at Ascent Trading on TikTok. And have a wonderful and green week, guys. I hope this was a great video for you to kind of base your equities off of what is most relevant, what has the most strength, and what has the most volume. Obviously, I've told you, you should add all of these stocks to your pre-market prep. There is a lot of money to be made on some of these moves. Speaking of money, cha-ching, let's push lower. Come on, get there. I gotta stop. We're ballooning runners, so, we're playing with profits pretty much. Once again, thank you so much for watching. Have a green trading week, and thank you for listening.